Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, March the 25th. The year's 2022. Let's talk trading. Weekly wrap-up. As always, these videos are for educational purposes only. Your results may differ from mine. So let's jump right in. First, let's take a quick look at the monthly chart. We are 222 pips below the monthly open. 195 off the low and 243 off the high. If you notice, we are just 16 pips below the future pivot point for the month. For the week, we're 24 pips above the open, 74 above the low, and 104 off the high. Notice we are in the weekly upper wick zone. All the weekly open gaps have filled. For the day, we are inside the opening range for the week, which is Monday's high and low. You can see we cross back into that area. And for the week, we're 24 pips above the weekly open. Notice we're 332 below the yearly open. In fact, I had a trader comment how they went back over charts and saw what a strong level that the yearly open was. You can see here we crossed below, crossed above, did some crisscrossing, and that final cross below put the pound pretty much down. But if you take a quick peek, though, you can see here, looking back at the previous year, let's see, I believe this is this is December 2020, right there. So if you look at some of the other yearly opens, you can, pretty much see that there is a lot of action around that yearly open. We had an inside bar 5 days ago. We are just below that inside bar. You see we opened inside it. We broke above it. So those inside bar traders, if you traded the pound, you got paid off if you took the profit when it was available. So if you notice, it actually broke out of the previous week's high. Or I'm sorry, the previous day's high here. So there's a couple of nice breaks, but then when it started pulling back, this should have been the level where you at least took profit. For the day, only 66 pips of range. We've got, let's see, 2, 4, 6, 7 pairs over 100 pips in range. Buy zone, very interesting. You can see here we've pretty much been staying above the daily open. We did have one sell signal here, but if you scrunch the chart, oh, there it is. You can see we also crossed below that weekly open, then crossed above it once, twice on the hourly candles there. Now, if any of you have been following me for a few years, remember between the daily open and the weekly open, that's kind of like the no trade zone, because you don't really have a direction. So you would look to take the longs here because you'd be exiting out of the zone, and look to take the shorts here because you're exiting out of that zone between the daily open and the weekly open. It's just one of the things that I had noticed, how you can really get chopped up in this area. And so see here, it dipped below the open but kept pushing out of that zone. It's something to note. You may or may not use it in your trading. A very range bound type of day here. You can see we put in a high, then put in a daily low, and then almost went and challenged that daily high. Almost. So red rats, this was a very clear signal here to get your shorts on. You can see here for the M15, there's the highest low right there. So once again, sometimes you can use these different methods that I've shown you. You can combine them, use them as references, use them to confirm your trade analysis. Pivot, we took out today's pivot near R1, bias is short. You can see that paid off a couple of times. And right there's yesterday's high. Price fell back below yesterday's high. So we took out today's pivot, but we didn't take out yesterday's. Almost. We actually missed it by a point. And 245 was the pivot, and 244 was the high. So that's close enough. So if you were fading the pivot today, you would have been going long. And if you were also fading yesterday's and this one and this one, you would have been taking those as long, as reasons to go long. You can see here on the week that we took out this missed pivot from a couple weeks ago. We still have a missed pivot here. On the monthly, we still have missed it. So we're coming up to next week's the last week of trading for March. We've got 4 days, Monday through Thursday, with the first April Fool's Day being on Friday. So something to keep in mind for next month. We'll see where these pivots are and see if we maybe take out one, if not both, of the monthly pivots. The wick zones today, once again, kind of range bound, in and out. You see we went from one extreme to the other and almost back, and then back down towards the middle. Right now we're outside of the wick zones. Remember, price doesn't like closing in the wick zones, especially on the daily. And we look at our smart ranges here for the week, only 179 pips. You can see here from the past 4 weeks we've been declining in range. So maybe next week will be small range, or maybe it'll break back out to the 200 level. It's kind of funny, we had 2 weeks in a row, 211 pips. You can see here the daily range over the last 12 bars only at the 8% tile. And of course you can use more bars if you want, but I pretty much tried to narrow it down because we get by having less data, we get more of it of a reading. Let's see, how should I say this? We get readings that are going to trigger or react quicker to these price fluctuations, as opposed to if we look at 100 or 1,000 days, it's going to be smoother. And we want to know, what's price doing over the past, 12 days or 12 weeks or 12 months. And we can then get a better clue of what to look for price to possibly do. So we broke out of the previous week's high by 88 pips. We did not break out of the previous week's low. High minus close for you rats, 106. Close minus low, 73. So trading off those weekly rat zones proved profitable. And then the buy zone, weekly buy zone, high minus open 128, open minus low 51. Once again, trading that weekly open with the buy zone, profitable if you take the money when you can take it. In fact, I want to, well, let's finish up the charts, and I want to speak about what one trader has experienced this week. On the wall mall, price action simple. You can see here the move. The range has died off. Price movement's just slowing down. 3 hours ago we had a 20, and 4 hours ago we had a 41 pip bar. So you can see we had some nice movement there. Higher low, lower high, with the semaphore levels being indicated here by the red and blue. So you can see here we had a bunch of blue, price moved off it, and right here we had a lower high on the 5-minute. We had a 311 signal with the weight bar, and then boom, price moved up. But if you didn't take it, it came right back down. Second opportunity, and it moved up again a little bit higher. And this just has the rat and the wick zone overlays. And you can see from an ATR standpoint, 43% from open to high and 25% from open to low. And right now we're at the 9% close from the open, 9% ATR 14 on the daily. And what I wanted to talk about was from that one trader. We have been, talking about trading better. And this one trader, he posted out on my Facebook group, and he was doing really well. And then all of a sudden, he gave all his money back to the market. He pointed out his mistakes, failure to follow the plan, failure to, follow the plan, failure to follow the plan. Everything he said was he just basically failed to follow the plan. But the big mistake he might make is if he tries to do something different in terms of another method. He had a method that was working, was putting pips in his pocket. His account was increasing. But then he just failed the method. The method didn't fail him. He failed the method. So, please, go back to the method. The only thing you need to change is not make the mistakes that you made. Take profit when you can. Wait for your signal. Don't just airball those trades. And sometimes, if you're bored, then go play a game. But don't let trading be the thing that, gets you out of boredom. Because good trading really should be boring. Because you're just doing the same thing over and over and taking, money out of the market. It should be boring. Shouldn't be exciting at all. If it's exciting, chances are you're either trading way too heavily if you're getting excited. So it's just something to think about and something to caution. So I really hope that trader, when you sit down at your trading platform in the days and weeks and months and years ahead, you review your trading plan and you stick to it no matter what. So, fellow traders, I wish you a fun and safe weekend, and I hope you had a profitable week. And when you come back to your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is TheRumpledOne, over and out.